Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries, usually using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So we're trying to rally out of the hole, and it was a bit of a storm in January. We had lots of stocks down over 50% now from their highs. Some of them just in a couple of months. They were up there in November and have literally washed out. So I wanted to talk a little bit about the backdrop, why I think it's a good time for the market to try and rally here. My subscribers were reading about that a couple of days ago, and I know they've enjoyed the ride over the last couple of days. But we've had this big downdraft. We're looking through the washout, trying to find out if there's information there, and is it time to try to put money back to work. So I think the real problem is whenever we're near a low, it's choppy. It's not usually a nice smooth rise out of the water. It's not like a water skier where you're sunk in the water and all of a sudden you just get out and you're up on the surface and you go for a while. It's usually choppy and a little bit of hard work trying to hold through the chop. So just a brief little bit about me. gregschnell.com, the website is constantly improving. We've got a whole bunch of stuff we're trying to roll out this year. But if you're interested, you can try our membership service. You can get an annual membership at gregschnell.com for $860, and there's a monthly program available at $79 a month as well. So Dwight and I try to post quite often. I post a 1-hour video every week and a weekly newsletter. There's a broad range of technical analysis on currencies, commodities, equities, covering the gambit. So hopefully there's something there for you. And again, we send out an email every day with some trade setups that are interesting, kind of pattern trades that are looking like they're ready to break out. So anyway, if any of that interests you, head on over there and check that out. I'm going to jump into the charts here and just talk first of all about the market. So here was the Nasdaq 100, and this black line it's a 100 period 60-minute chart, or it's roughly the 20 period moving average on a daily chart. So what we've got here is we struggled here, and then towards the end of the day we broke out. We've got AMD and Alphabet pushing us higher in the after hours, PayPal pulling us lower, but in general it looks like we're going to be able to go higher here. So when I look across the markets, the Nasdaq is trying to get back up through its 200-day moving average. That's kind of important. Just what is the 200-day? It's a long-term average that tells us the direction of the market. So when that's pointing up, we're usually in good shape. We're flattening out here a little bit, so that's not great. The 50-day moving average is pointed down. So typically investing is harder when these moving averages, the shorter ones, the 20 and the 50, are pointed down. We're kind of in a market chop. When the 20, 50, and 200-day are all pointed higher, it's a much smoother world. So we've got a downtrend in momentum here. We're trying to get a PPO buy signal. Probably on Wednesday morning we'll get that. I think the bigger issue to watch out for here is we want to watch what happens when we get up to these prior highs. So this is the September high, and over here on the right shoulder is the level of 15,750 or 15,700. What happens then is we're going to get the people who bought above there trying to just get out and get even. So they're in a losing trade, and as the trade returns to profitability, it's like, just get me out. And if you've ever been in that that mode, you'll know that all of a sudden when that thing goes from red to green in your account, you're very tempted to sell it. So it makes for a bit of resistance, because all of a sudden the people who bought during that choppy period all of a sudden want to try and get out with at least a profit. It might be $1, but they want to get out after seeing a big red number on the side of the screen. On the weekly basis, again, we got a big sell signal here pushing down the chart. This is the Nasdaq 100, but it's getting down around the 0 level, and historically that's a pretty nice place to buy the Nasdaq. We don't spend a whole bunch of time with the Nasdaq below. So if we just cycle back 18 years here, what you'll see is, we got support here, 2018, 2019, this was pretty good. 2015, 2016, that was pretty good. And in 2010, 2011, 2012, and early 2013, that was a great area to look for support. So we don't want to be too bearish here, as the market has already had a 20% pullback. We're halfway up that as of Tuesday. We're back up 10% from the lows. I think the real question is, do we have enough horsepower to get way back up there? But I do think this is something pretty interesting. Last week, we had huge volume that obviously shows somebody wants to step up and push the buy button. And so with that kind of volume, at least it's got to make us pay attention and say, is it just people, trying to get out of positions, square positions? What is it that's going on here? But I like the big volume coming in after we've kind of based for the previous week. We fell down hard. Last week we based, and this week we seem to be taking off to the upside. So I do like that volume signature on the basing pattern. The full stochastics, it doesn't get down to this 20 level very often. Again, this is, we're going back here to 2008, 2009, and there's, one touch, 2, 3, 4, 5, 6, 7, 8 touches in 12 years. So it's a pretty nice place to be long the market. And if we're wrong, we can set a stop relatively close. So that's one of the reasons that I wanted to go through the NASDAQ and just talk about that in general. I do have a couple other charts that are interesting, and one is the breadth chart from the NASDAQ. I could give you a lot of data here, but I'm going to try and keep it very simple. This is the advanced decline line, and this in the middle here is a 2-week moving average. So what happens is on any given day, you could have more advancers than decliners. And that would push the market, that would push this indicator up. And so that's down here at the bottom. That's each day. And then what this area in here is it's the cumulative. So yesterday there was 3,000, so we'd add that onto the number from the day before. And on Tuesday there was 2,000, so we'd add that on to the day before, and etc. So we get this change in direction in the chart. Now, it's helpful. It's not great for timing. As you can see, this was sliding for a long time while this was going up. But what we do want to know is all of a sudden when the buyers start to kick in again. So when you look at this 2-week moving average, you can see we're down at a pretty depressed level, like worse than we were for COVID. Now, there's a few more stocks on the market, so we can't use that entirely as fact, but clearly, if we reached kind of a COVID level, that's a pretty serious pullback. Now, if we just unwind the chart for 20 years, even looking at most of the extremes, 2018, 2008, 2001, all of those dates are pretty familiar in everybody's mind, and this was a significant washout below that. So we don't want to be too bearish. We want to be aware that we could be entering a big bear market. But in the meantime, we should have some pretty good rallies. Now, I've got a few other charts I'd like to show you to back up that data. But I think it's more important, rather than just kind of going on and on about how damaged the market is, to talk about potentially where to look. And last week on the Market Buzz, I covered off gold and oil, and gold ended up pretty much falling the moment the Fed announcement came out, and oil held in there and pushed higher. So the oil names are higher, and gold names this week already have started to turn back up again. But you're looking for stocks that were breaking out to new highs. Now we also have the opposite side of the scale, and there's really smart people on both ends. I think what you don't want is a stock that's stuck in the middle. So you either want something that's breaking out to new highs and behaving very, very well, or something that has been terrible and is finally waking up and smelling the coffee and getting out of bed and starting to make a climb out of the hole. So I want to talk a little bit about two different ways to approach the market, and we can see what's going on there. So when we look at this is just the Nasdaq 100 and looking at the charts. So this is as of Tuesday night. I'm recording this after market close. And what you'll see here in 1 week, some stocks making some pretty significant moves. So here we have Netflix up 24%, CrowdStrike. I didn't expect that one to be the second best name. Like, look at its scooter ranking. This thing was down at 7. And yet it's one of the fastest movers. Netflix is down at 10 and it's up 25%. So that's kind of a surprise. Xilinx had a scooter ranking of 92, which is really strong. So it's telling us that it was strong already, and it again is up big. But the one thing that I think is pretty compelling is if you just look down this scooter ranking, there's 1, 2, 3, 4 stocks that were, I'll call it leaders, above 75% in this list. And the best performers have all come from different parts of the market, most of them beaten down. So 6.6, 15, 5.3, 6.8, 1.2. Like, these stocks were the bottom performers out of the stocks in the large cap group. So to see that kind of rotation where these things are getting some solid thrust higher, I think is a pretty important clue. And what we can do is we can get rid of this number on the front here, and then we can sort them in this order. So this is just basically sorted on the change since a week ago. And so the way we do that, we run up and we hit the edit button, scroll down to the bottom, and then we're going to go select all, and then we just click the remove numbers button. And once we do that, they'll be gone. And now what we do is we go back into summary mode, because in edit mode we don't have any columns that we can sort on. And then we're going to sort on percentage change, but we want it based on 1 week. And then we go to the very bottom of this page, and I'm using speed keys to jump around. But as we get down to the bottom, we're going to hit number in sorted order. And then this is going to put a number in front of all of these, and we can keep track. Now, if I click on this column, that's going to work. Now it's floated back to intraday here. And if we go back to 1 week, you'll see that we're back in this sort order. So with that, now we've kind of got it in the order we want to look at it. And again, we can go look at what's still in the dumpster and what's actually starting to break out. And that's pretty helpful information, right? That gives us some pretty good places to lean into and take a strong look at these stocks. So I'm going to go to 10 per page, and it's a little bit hard to use a weekly chart for this analysis because the market lost 20% in January. So for me, it would be better if we got into a specific chart style, and maybe I like to go to this daily trading style. We're going to pick 8 months just to make sure we've got context on what's going on. And then from this chart, I think the benefit is looking at some different indicators. So I'm going to change this one here where I've got a MACD, just a histogram column. I'm going to put that as the scooter ranking, and that'll help show us that they're all beaten down or whatever. But it's not just that I want to see that they're beaten down or not. What I want to see is I want to see this start to turn back up again as the stock breaks out. So Netflix was terrible down here with a scooter ranking of 10, and you can see once it starts to break out, that's a pretty good place to get on board. That made for a pretty nice rise back in August. The momentum indicator is clearly down and out on this, but this was a $400 stock just 2 days ago. Well, it closed Friday at call it 380, and finishing today at 450. That is a healthy move. And again, whether we're specifically focused on this stock or just the broader market, I think what we want to see is, first of all, buying interest showing up. We want to see momentum improving. We want to see some specific trend changes on these indicators. I'm going to take off this green band, which is, I call it like a zone of interest. If it's above that, it's bullish. If it's below that, it's not. And so we could use that zone. But again, when you're picking bottoms, everything's going to be below the zone. So we're going to just take that off for now. And that cleans up the chart quite a bit. And then I'm going to take this style and I'm going to apply it to all of the charts. And the way we do that is we just hit this apply style to all button. Okay, so that's done. So now we can go back and view all in this chart mode, and I'm going to turn off this auto size, and what that allows me to do is then I can annotate the chart without getting out of this 10 per page mode. So the one thing that I'm noticing on Netflix, first of all, is this very short-term PPO trend here. You know, it was having trouble getting up into any sort of high level for the last 6 months. Wasn't too bad back in here. But if we shorten this time frame up, you'll see that for the last, really since November, this thing was breaking down hard and couldn't do anything right. So what we want to do is just notice that all of a sudden this thing is on fire, and really a change in trend, right? We were negative before, now we're soaring to the high side here. We're up at 5%. We hadn't been anywhere near 5% on this whole chart. So I like that from a short-term momentum perspective, it's changing. And then I typically would draw a trend line across the top of my PPO. And if you wanted to, you could wait for that to break out. Obviously, that would take the chart quite high. I'm more interested in the fact that I have a lot of volume showing up here, and that looks pretty solid for me. This is a washout capitulation volume. Now this is 20 million, 20 million, 20 million. There's somebody showing up on the buy button for that. That's not mom and dad picking up those shares. Okay, we're going to go back into this other mode. Now, CrowdStrike Holdings, this one I like as well. We've got a couple of things going on here. That same image that we saw at the bottom here, we can draw this trend line across here. This PPO momentum indicators at the highest level since the stock market topped in November. That's kind of impressive. We have a downtrend in the PPO, and that's already turning up. I like this higher low while price made a lower low. So again, you have a price point here, a price point here, a price point here, and then you have your PPO momentum indicator. See how it's higher on this low while price is lower? That's the positive divergence that we want to see. We've also got huge interest in this stock. If you look, the month of January has way more volume in here than pretty much all of the other months. So somebody's stepping up with some serious interest in this CrowdStrike. And again, it's up. It's one of the most popular or the biggest price moves since the COVID low. So to me, that looks pretty good. And then if we go down here, Xilinx, again, this was a strong stock. The scooter ranking was really strong to begin with. It, to me, looks like it's turning and burning. Our PPO is breaking this downtrend line, right? Annotate, so we've got a momentum downtrend that's changing, and we also have the highest level on our short-term momentum indicator showing up. This wasn't a bad rally here for 3 days, but what I like here, this is actually when the Nasdaq topped back in late November. This to me looks like it's changing the downtrend. In overnight trading on Tuesday, AMD reported after hours, and I think the last time I looked, the stock was up substantially. So that's probably going to help the semis. We're moving back above the 100-period moving average. There's just a lot of things to like on this particular stock. Okay, I'm not going to go through each one. Here's Atlassian. You can just see big momentum downtrend. That's what I'm looking for. I'm looking for a change in momentum. I want to see this start to break higher. This is still in the lousy zone. It's down real hard here, sitting below 30. I would draw a trend line in here, and as long as it holds above, let's say 320, I'm interested. And if it can't hold above 320, I probably want to let it go. Maybe I pick a little bit lower, just the last 2 days lows or something. But I definitely want to see this surge higher and keep my interest. I don't want to let it go back and start base building again. And then MercadoLibre, this one's making a higher low while price made a lower low, so that positive divergence I like. Look at the volume showing up for work here. Somebody is pounding the buy button here. Compared to all last fall or summer, this thing was relatively quiet. Now all of a sudden, almost a doubling of volume here. So somebody's interested. I do like this almost head and shoulders pattern on the momentum indicator, just starting to turn up into a buy signal here, pushing up. I'd like to see this have gotten higher than all of these peaks, but not yet. And the scooter ranking is still terrible on this. So it is a fast moving stock, but again, it's been one of the underperformers. OKTA, this is just a big down sloping trend line. Looks like it's ready to break. PPO buy signal starting to form. And again, if you drew your multi-month trend line, PPO would be appearing to break that trend. We don't have a higher low in momentum, which is a little unfortunate. I'd prefer to have that as we look through the bottom. So we have a high, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. So far, that momentum trend is still terrible. So this one would be a little bit harder for me, just because I don't have an improvement in trend yet. But I do like the fact that I'll call it the last 3-month trend line looks like it's about to be broken. We got a PPO buy signal on Tuesday, and this downtrend line looks like it's ready to be cracked. So all of those add up together to make it pretty nice. Here's Moderna. I think we all know what they do. This thing has been in Nowheresville for basically since December. It's been one of the worst stocks in the market. Scooter ranking of 1.2. Again, this thing was 275, pulled back to 150 in the last 6 weeks. So that's been a bit of painful trade. I would just say there's a downtrend line here on momentum. If that's going to turn and burn higher, that would be nice. Looking at this really short-term momentum indicator, you can see it's finally moving back above zero. It only did that once in the last, call it 7-8 months. It's been just terrible. So perhaps that's going to be when we finally had a washout low. I would have liked to have had a bit more spike of volume on here to mark the lows. 17 million shares is still pretty high. It only traded 7 on Tuesday. So that maybe that was enough to be washout volume, but that's the kind of thing we're looking for. Here's Lulu, big downtrend. This is breaking. The stock looks like it's ready to turn and burn higher. I wouldn't have trouble working on that stock, just knowing the price of their product, their cost of goods sold, and this has already had a relatively big move. Again, we've sorted these based on their change over the last week. So this is from 300 to 340. That's been a significant move, 10% at least for people. Sirius satellite, this thing's been a dog that doesn't bark. All of a sudden it's get some radio airplay here. This thing is starting to break out to new 6-month highs. So anytime something's breaking out to a new high, we have to like that. I think a couple of things I like. First of all, I'd look at this scooter ranking and what's it doing. It's jumping up to new highs we haven't seen before. Price is breaking above this previous band. Volume is starting to come in on the stock. We've got a downtrend line here. There's not much I don't like here. This one looks very, very healthy. There's a significant change in just about everything I want to see. So this stock looks like a nice setup for me. Again, I'm not going to let it get back into the base. I want to see it fly from here. Okay, PayPal Holdings, they reported after the bell on Tuesday and didn't do very well. It was starting to make a higher low and at least get us interested. My, I'll call it short-term PPO momentum indicator was flagging at one of the highest levels on here, but that's probably going to cycle lower. They didn't trade very well after earnings. Okay, so hopefully that gives you some ideas of different ways to go about looking at the market after we've had a washout. Again, you can always sort for stocks breaking out to new highs. that Sirius satellite stock looked pretty interesting, breaking out to 6-month highs. And then the second component of that is if you're looking for trying to find something coming off the lows, I typically want to find something that's outperformed the Nasdaq over the same period of time. At least it's moving up faster than the general average is. And then when that starts to push higher, that's going to attract more people because it's outperforming on a relative basis, even if it's only for a short period of time. That is going to attract institutional investors to the stock. So some of those clues can help us find stocks that are beaten down. I also posted a Your Daily 5 article on Wednesday, and with that you'll find some really beaten down names, all of them down more than 50%. And I was going through the file trying to find some interesting places if you were looking for, quote, value trades. Anyway, hopefully you'll find that entertaining. If that's not your style, don't worry about it. You can find the ones that are. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks for taking the time to join me. Head over to gregschnell.com to see if there's anything there for you. Thanks, everybody. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.